How has the environment changed, especially the fundraising environment as it applies to alternatives like private equity after the Fed, after the 50 basis point cut, and also after what we learned from China earlier on this week and a major stimulus move there?
So I think if we look at the overall fundraising environment, you probably have to go back a little bit as well, in the sense that on the recent past, you've seen a lot of the natural holders of private assets, pension funds in particular globally, who have become a lot better funded over the last number of years. And as a result of that, they have been not re-upping or coming into follow-on rounds. And so what that has meant is, particularly in private equity, the larger entities have been able to continue raising. They're raising off the back of their names, the back of the access that they have. But some of the smaller entities are actually finding it harder to do the fundraising at the moment. So that's creating some very interesting opportunities, because they are looking for co-investment, and some of the larger entities that are overweight in the private equity side are now looking to do secondary sales. So there's some very interesting opportunities there, but you have to kind of look through the various deals that are presented to you. I think more generally, looking at what's happened over the course of the last few weeks, there's some, I think, positive momentum out of that move in China. But I think, as somebody once said in an Irish context, a lot done but a lot more to do. And I think there's going to be a need to see follow-on if we're going to see the momentum continue.
What is the sentiment that you're seeing at the moment towards Asian assets, Niall?
Yeah, and I think we in our own portfolios have been overweight emerging markets generally, and been overweight Asia. That has been a more difficult position compared to some of the others. I think a lot of what's going on in that context is obviously driven by the context of China and the news over the last few days. And I think when we look at that, we think that there's a lot of positives to be seen in what's been seen in terms of the rate cuts, the equity support, the mortgage release. But at the same time, there is that danger that there's a liquidity trap, that people have effectively kind of lost their sentiment and their appetite for risk. And so in that context, it doesn't really necessarily matter if you lower the rates. You've got to do something to stimulate maybe the more animal spirits, if you want to put it in those terms, to get people to transact and be in part of the market. So I think in that context, a key driver is going to be what continues on the China side, and we believe need to see further stimulus going down the tracks in order to keep that momentum up.